and up from the ground came the bubbling crude. Gold, that is, Texas tea. Hey, for those of you that are my age and older, you'll remember the Beverly Hillbillies and Jed Clampett. And what a wonderful show. Man, I miss the days like that. What I really don't miss, in all fairness, are the conversations over gold and where they fit into people's portfolios. I get asked all the time, Joe, on the radio, why don't you talk about your investment returns, things you've done? It's illegal, and it ought to be. You got to understand, people who sell gold do not have those regulations. They do not have those rules. They can say things like, we're in a recession, depression, the dollar's falling. You know, they can say anything they want to say to instill fear in your hearts. And boy, do they do it all day long. We get asked about putting gold in IRAs, and so we're going to answer the questions. Not because we think this is a good idea, but because you ask, and that's what we do here on Consider This Program. Well, good morning and welcome to Consider This Program. I'm your host, Joe Clark.
And I'm Aaron Rheaume.
And we are going to discuss something that, honestly, I am going to learn about because Aaron had to research it for us. It is not something that I have ever encouraged, ever done, nor do I think it's a really good idea. But we get a lot of questions over this commodity called gold. And you all know Mr. Wonderful probably on the Shark Tank. He's restated what I heard Ben Bernanke say, our old Federal Reserve Chairman, what I've heard Warren Buffett say, and what you can hear Joe Clark say if you've listened to this radio show for 22 years, countless times. If you believe we are in serious economic trouble, buy little whiskey bottles and cigarettes because people will trade that for food, right? They will not trade gold. I'm telling you, if it's bad, you bring the bar of gold to me. I am not giving you the bread to feed my family. It's just not going to happen. But people come up and say, hey, I think I need gold in my portfolio. For many people, the only thing they have are quote unquote tax-deferred assets or IRAs. And so the question is, can you put gold in an IRA? I want to be as forthcoming with this as I possibly can. My answer is going to almost always be no. We do use gold in our portfolios when it's right. We do it in an exchange-traded fund. We don't buy bullion. We don't go out and buy bars and try to bury them in the backyard mattress or get into a vault. That is not our cup of tea, right, in terms of where we are. So this is not me encouraging that. This is me being as authentic as I possibly can and answering questions that you guys have asked. So Aaron is our Director of Financial Planning, one of my partners, a dear friend. Tell me about a glittering IRA.
Yeah, I mean, I'm going to second and third everything that you've said about gold IRAs. They should be set up completely separate from any IRAs or 401ks or any outside investments that you have. In fact, the IRS wants you to have what's called a self-directed IRA, which will hold that tangible gold, silver, or any type of commodity like that. So it has to be done separately.
Should be done separately. So yeah. I will tell you, I just texted Ed Slott earlier today. Ed is a dear friend of mine. If you don't know him, you can go to IRAhelp.com. I was on Ed's board for 10 years and one of the founders of Ed Slott's Master Elite IRA program. We work with about 330 CPAs, tax attorneys, and geeks like me in the financial world where we talk about this stuff. And anytime you're opening an IRA where you're stepping on the gray area, and believe me, gold by itself is not the gray area, but it can easily get you into a gray area accidentally with things you don't even know. Just like buying an apartment building, you can do it. It's just not necessarily something that you want to do slightly. Lots of problems that can come with it. So anytime you're doing something that's a little bit out of the ordinary, make sure you always have a separate. That's what Aaron's trying to say. A separate IRA. Remember, you're allowed to have an unlimited number of IRAs. The total is one thing, but the number of accounts that it's in is different.
Yeah, and so if you're going to do that, you would want to use a company that specializes in gold IRAs. They actually store the gold for you. There's a lot of costs and stuff that we don't even want to get into, but make sure you're doing something separate and make sure you're doing it through a legitimate company. Again, this is not us making a claim for it. If we were to own it in our portfolios, we would use it inside of an exchange-traded fund.
Now, just to be in all fairness, and when he's talking about storage, by the way, you do have, if you have physical gold, it has to be stored.
Yes.
If it's in an IRA, it cannot be stored in your house.
Yes.
Right? So you are paying a fee for somebody to hold gold that you can't touch. Why not buy an exchange-traded fund and make this simple? You can do that with gold, silver, and pretty much any other metal commodity if for some reason you believe that it's something that you need to have in your portfolio. So, in all fairness, Adam Harder, CFA, another partner, Chief Investment Officer. Adam is one of those people who says if you want to have some gold in your portfolio, that you can do that. He's a little bit younger, but he understands that. I don't. So we're allowed to have disagreements. We rarely have them in public. You don't want to be in an allocation meeting. We all walk out agreeing, but that doesn't mean we agreed going in.
Right.
This is one of those things where he understands my point. I listen to his point. If you get the joke there, right? It is one of those things. And gold, in my mind, is not a storehouse of value. Casey, our producer, is going to put up a slide. If you are listening to this show on a podcast or a website, or the radio, obviously you're not seeing the slide. But if you want to, you can go to our website at yourlifeafterwork.com. You can download or get a link to the video where you can see the YouTube video that will show Aaron and I. If you just want to see who you're listening to, you can see it, and you can also see the slide. And Aaron, why don't you walk them through the point you were trying to make from it?
Yeah, this slide will show you what's happened going back from 1802 to 2002 based on what gold has done, what treasury bills have done, what bonds have done, stocks, as far as return for a 200-year period. And so a lot of folks think gold is used for inflationary type investments. As you can see on the chart, if you look what gold has returned for a 200-year time frame, it has earned 0.7%
on an average year.
You've
got to say that. That's not total. That's an average year. So I like it the other way. $1, by the way, has grown to $1 invested in gold has grown to $4.52.
Yes, $4.52.
Now, some people would say, well, that's 4 times, 5 times my money, 4.5 times my money, right?
Sure.
Right? And especially when you compare it to $1 that's grown a nickel, right?
Yep.
So $1 has what you would say is maintained its value, right? And the gold has gone up 4.5 times. What would have happened if I would have owned a government bond or bill?
Government bond or bill, that would have grown to $281 as a bill or $1,778 as a bond.
That sounds like a better deal to me, right?
Looks
now,
like it.
If I'd have bought a stock, what would have happened?
Now that
on average
has gone up 6.6% since 1802.
Now, I want to pause him here because this is the Purdue professor in me coming out again, right? Because I want you to understand that when you look at bills, they went up 2.7%, and the bills were $281, right? So stocks average 6.6, right? So, Aaron, there are a lot of people out there that are now extrapolating, right? And they're taking 2.7 times 3 is greater than 6.6.
Yes.
Yeah. And so they're going to take $281 times 3 and assume that they're going to come up with a similar amount of money. Right? They're going to take it and they're going to say, so that's 600 and that's 3. So you've got $783 or $786, whatever it is what you'd have if you'd invested in bond or invested in stocks.
Yes.
Right? So the yield's 3 times greater. Right? Do you remember Einstein's famous quotation about this?
The 8th wonder of the world?
Yes.
Compound interest.
He said, allegedly on his deathbed, I wasn't there. Allegedly, he said, I don't know what the 7 wonders of the world are, but the 8th is compound interest. So tell him, Aaron, at 6.6% average return for 202 years, what would they have had?
$704,997.
Seems like a little bit more than 3 times.
Yes.
Yes. So 2 things to take away from this conversation. 1, the average rate of return does matter. The higher, the better. The longer, the better. That's why we teach people to start saving early and often, right? It also means that anything that erodes or decays or what we call leakage in your returns, needs to go. The reason we watch fees and expenses like a hawk is because when you're looking at 600 million plus, which is what we manage at the time of this recording, when we look at that, a 0.5% may not sound like a lot of money to somebody with $100,000. It sounds like a fortune to us, right?
Yes.
And we safeguard that in every way we possibly can. And it's a critical thing. So this whole conversation has been about gold. So we'll turn it back to that and having a gold IRA.
Yeah. So last question I want to ask you, Joe, and then we can wrap this up, and maybe you can bounce this back on me, is, are there any hidden costs to gold IRAs?
Consider it bounced.
All right. So yes, there's things that, as I mentioned earlier, storing the gold cost. The gold IRA companies have fees that they charge. Sometimes they charge a spread. I've seen them as high as 17 to 33%.
So a spread is the difference between what you buy it for and what it's currently worth.
Correct. So you take a $50,000 investment, knock off the spread, you may only have, let's say, $45,000 of that investment.
Congratulations and welcome to the game.
And if you go back to that chart, you can see what gold's done over time. It's going to take a lot of time to potentially make that money back up.
So I heard all through 2019, there were commercials on CNBC, the only TV that I watch. I quit watching the news in 2009. You can think I'm a weirdo, but my blood pressure's low and I feel just fine. The only time CNBC is unmuted is when one of my friends are on. I used to be on CNBC all the time. So it's one of my friends are on or an economist that I admire. The rest of the time, that puppy is on mute. I'm watching data and numbers and details. And the commercial would come on, and it just drive me insane. We all know this is 2019. We all know we're in a recession. We all know the value of the dollar is going down. Everybody in Washington who understands economics, by the way, is praying for the dollar to fall in value, right? And these people are telling you the dollar is too weak and falling, and everybody knows it's going to go to zero. And people would call and want to buy gold. Right? Mm-hmm. You cannot, as we talked about in multiple times on the show, you can go back and listen to it on our website. When you click on this, happy to help you get there. But we talked about emotional trading, and that's what that is. That's where somebody else transfers their fear intentionally into your soul so that you go out and do something that is not necessarily in your best interest. And this is not me telling you that I hate gold at all times. There are reasons to own it, but only if we believe that it is a technical purchase. It is not a storehouse of value. It's not something you need to have as a permanent part of your program. And trust me, if you come to the Clark household, and it's really, 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 really bad, you're not getting my bread or my cheese for your gold, right? It's just not, and I don't smoke cigarettes, so you're really in trouble, right?
Yeah.
Honestly, you really have to think this through for the journey, my friends, not the day. Thank you, Aaron, for bringing it up. Get set up for your next steps meeting. You can call us at 800-928-4001. We will tell you exactly what we believe to be true. 800-928-4001, yourlifeafterwork.com.